Welcome to our Zoom. If I am loud and clear, please drop 555. Let me know if we are together. Okay, I see. Again, ladies and gentlemen, thank you for being here with us. And ladies and gentlemen, please help me welcome Chairman Sharmarke Abdulsaq.
Assalamu alaikum.
Over
Thank
to
you
you.
very much. Thank you very much. Good evening, ladies and gentlemen, wherever you are. This is our the third night of the week. I have 3 nights which I do the session, which is a basic forex. So tonight is it's the last night of the week. We have been talking about a lot of things for the last 3 days. So let me dive in and continue. Tonight, we are going to talk about stop loss. I hope that everybody can hear. Welcome, sir. Thank you. If you hear me clear, you can write in the chat 1-1 so that I know that everybody is with me. Yeah, thank you, Shamso, Abdulrazak, Guled. Thank you. Yeah, stop loss. Stop loss is a very important when it comes to forex trading and when it comes to the basic forex. So once we finish this lesson, you should know the answers to the following questions. What is stop loss? How do you calculate stop loss? How do you place stop loss? And why do you need a stop loss? Those are the key important issues I want to talk about tonight. First, stop loss. Stop loss is your account's safety net. It will help you to save your money. And if you are trading without stop loss, it means that you are giving your money away to the big market. It's not possible. You need to have a stop loss whenever you want to trade. If you are entering a buy from here and you want this buy to go up, you should always have a stop loss here so that you don't have to worry about if the market comes back, boom, just you will leave here. And that means how much you are going to risk. How much do you afford to lose? That is the reason why we have a stop loss. You can have without take profit, because of take profit is a money in the book in the bucket, but you have to protect your wealth, and that's very important. So a stop loss is a safety net. It will help you to protect your wealth. Why should you use stop loss? Very important question. For example, if the trade goes in the wrong direction, a direction that you were not expecting it to go, your stop loss will stop the order after a certain price limit has been reached. This is example here. If you bought here, if you buy here, and here, as you can see, this is an uptrend. It's uptrend, it's going up and up and up, okay? And then this comes and then goes, and then you said, aha, now this price might continue higher and higher and higher. But sometimes it doesn't happen like that way. The market might come back and might continue down. So where will you put your stop loss? You put your stop loss here, which is under. When the market pulled back, come here, boom, tested, and then the continuation. So you put your stop loss here. but the market is not euros, so anything can change the situation. So the market flips and goes down. So that's where you will put a stop loss. If the market reaches here, you lose some amount of money, but you are out of the market with a disaster loss. Some people are not having a stop loss, and they just said, okay, I'm just waiting for the market to come back. But the assumption of market coming back is not always a reality. It's not always the reality. So you have to be very, very careful by having stop loss. Very important in risk management. When you are talking about risk management, stop loss is number one. So you have to think, whenever I wanted to trade in a forex market, the most important thing to think is the stop loss, because of there is a saying that we use always, which is rule number one: you have to protect your money. And rule number two is remember rule number one, which is to protect your money. And then when it comes to the third, that is when you will start, okay, now let me make money. So you have to always think about this. Let's move on. Yeah. Okay, this is the calculate. You wanted to calculate the stop loss, and here is a good example. For example, if you are selling this, if you are selling from here, and you are expecting this market to go here, which is TP1 here, and then you have another TP, which is TP2, and then you have TP3, and the market just goes. But your stop loss always will be above where the market has rejected. This is a resistant line. So this is where the market tried and did not break. And then there was also another retest, but it didn't go, and the market dropped. So it's very important that you have your stop loss above the last market test. So in a sell, you expected the market to go down. So you place your stop loss up. Very easy. And then you have to think, how much are you going to risk? You should think of, okay, if I wanted to profit X amount of money, I have to lose, I can afford to lose X amount of money. So that is the risk reward ratio, which is very important. Let me continue down. When it comes to the buy, it's the opposite side. You are buying from here, you're expecting the market to go up, and you are putting your stop loss below the previous level of the market. In a buy, you expect the market to go up, so you place your stop loss down, always inversely correlated. Yeah, it's always the same, always. So you have, if it is a sell, it's up. If it's a buy, the stop loss is down. Just like that. This is another way to calculate your stop loss. It's like calculating pips, because of it's the number of pips. How many pips are you expecting to lose? You just calculate the distance from your entry price and your stop loss. To find the SL on a buy, subtract from entry. To find SL on sell, add to entry. I think you get it what I mean. If you wanted to place stop loss in a buy position, always subtract from the entry, minus the entry, and then you will get how many pips are in between. If you are selling, you have to add your stop loss to the entry, and then you will get how many pips that will be. So it's vice versa. So It's very easy to calculate. Let me continue down. Now we are coming to our trading windows, and this is a part of the risk management. It's a part of the risk management. Yeah, here is MT4 Mobile MT4. If you have a balance of 100, if you are having a balance of 10,000 and your equity is $10,022, the amount of money you actually have when you have no open position, that is the amount of money which you have when you don't have any open position, because of here we see an open position, which means you have a sell position of GBP USD, which is which you have a $22 profit. So that's the number. Okay, let me just go a little down so you can see what I'm talking about. This number changes based on the wins and the losses. This balance will only change. The only time that this will change is when you close in profit or when you close in minus or a loss. That is the time it will change. As long as the trade here is running, the balance here remains the same. Remains the same. Here we come to the second part, equity. This is called equity. This number contains your balance plus your profit or minus your losses. If you are up in $22, it will show here. It's here, and then we can see here. This number moves when trades are open. It's floating. This number goes up and down, goes up and down, as long as the trade is running. Because of usually, maybe this one goes to 25 and sometimes coming back to 19, 17. So this number is just moving up and down depending on the win or the loss. If you understand what I mean, you can write in the chat one please. If you are with me, if you are following what I'm saying, Abdullahi Sheikh Abubakar, Abdullahi Livan, Muhammad Abdullahi, thank you. Thank you. There's some people raising their hand. I don't know if they have a question or anything else, so the host will help you. Yeah, here we can free margin. Yeah, this number represents the available money you have in your account to trade with and open new positions. It's always very important. This, you have the only time that you can open a position. If this free margin goes down and down and down, it sometimes reaches a place that you cannot order, that you cannot buy or sell. So free margin is equal equity minus the margin. This equity minus this. So that's the way it works. We continue down. With no open positions, equity, free margin, and balance should always be equal. If you have no any open position, whether it's a buy or a sell, these three lines, the balance, the equity, and the free margin will remain the same. Will remain the same. No change. We continue down. Margin level percentage, another important, very, very important also. This one you have to also, you have to think when you are, when it comes to the free margin and the free margin level percentage, this is sometimes very important. When you are trading, when you have open positions, this is the ratio between the equity and the margin. Again, this is a ratio. When your margin level reaches 100%, you might not take on any new positions. You cannot take any positions because of you have used all your margin and are in danger of having losing position is closed immediately. If this one, the percentage of margin level percentage goes down under 100, it's possible that the load of the order, the account cannot continue, so you might be stopped out. The brokers usually do to close some positions when the margin level percentage goes down. And here is broker might close out biggest losing position. First, never let percentage reach 100 or below. If you are going in the future to trade, please always this one, this one, this one, this is number one. The margin level percentage is number one. It's where the broker will get alarmed that, hey, this guy's balance is going down. He's losing a lot of money. And if you have, for example, if you have, okay, you have two positions. One position you are minus $100, and the other positions you are minus $80, and the third position you are minus $40. If your margin level percentage goes down under 100, sometimes it might go 70, 80, or 50, the broker will close the biggest loss. They will close this one. If the margin level still goes down, they will close the second big position, which is this one. If the margin still goes down, they will close, and that's what we call that you have to ban your balance, your account. Yeah. So very, very important. In fact, you have to take a note of this, and you have to see it by yourself in practice. You can do practice by checking how this things works. Stop out level. One is the margin level falls below 100%. Your broker might begin to start closing out traders, starting with the biggest position first. Yeah, it's still the same meaning that we have discussed. Okay, let me see the chat. I make practical this morning. Yeah, do practical inshallah tomorrow. Yes, I think I will add a few slides here, and then we are going to conclude our lesson. What are the limit and stop orders? This is another chapter, so I will go through. Upon finishing this lesson, you should know the answers to the following questions. What are the differences between limit orders and stop orders? The buy stop, sell stop, buy limit, sell limit. We have to know what is different. How do you place a pending order? Yeah, let me go through them. Buy stop, sell stop, buy limit, sell limit. Those are four terms of placing an order. The first one, let's start with a stop. Stop orders is a threshold, has to be crossed only once before you enter in the trade. Before you enter the trade, you are going to wait at the market to come to you. So you are placing a stop order. Stop orders are like a race. Once you cross those lines, you have entered the race. There is no way looking back. You are in the trade. Once the stop, buy stop or sell stop has been triggered. Sell stop, yeah, this is example. You place order below market price. You always put, if you are putting a sell stop, you are putting under where the market has not yet reached, expecting price to drop. And when that is crossed, you are in the game. So that's the way sell stop works. You place order below market price, expecting price to drop. Yeah, this is the same way. Now the trade threshold has crossed. Here is example that it has been crossed and you are in the market. Yeah, this is the way it works. You have a sell stop here. The market is coming down. Once the market comes here, boom, your order is open. Buy stop is the opposite. You are waiting the market to come here, and you are placing your order above the market price, where the market has not reached up. Once the market has reached your entry position and the market crosses, you are in the trade. There is no way going back. So that is basically how stop orders work. Uh, let's go to the other parts, which is the limit. Limit orders has to be crossed before you are entered in the market with expecting the price will turn around. Yeah, this one, it's a place that the market has already passed, but you are waiting the market to come back. You understand what I mean? Limit orders are like boomerang. Price has to go one way before it goes the other, up before down or down before up. You place order above the market price then must climb higher before it turns around and falls, and then you will be entered in the trade. That's the way it works. Not currently in trade. Here you can see you are not in the trade now. And let's see the way it works. You see here, the market has passed. Let me see here. This is a sell limit. The market come here. You are expecting, but you have not entered. You waited. The market goes up, and then I put here sell limit. The market comes back, opens my order, and then I write. Because of you are not sure if this market is coming back. If the market did not come back and continue up, yeah, you are not in a position, so it's okay. But the market comes back, opens your order, and then you continue riding. So it's a place that the market has already passed and come back. Yeah, simply here is a stop loss. The market has passed this area. You put your sell limit here. The market comes back, boom, opens, and then you continue down. And the buy limit is almost the same. You place your order market price and then must go lower before it turns around and raises, and then you will be entered in the trade. Just the same way. The market comes down, 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 passes, then you put your buy limit, comes back, boom, and then continue up. Yeah. It's amazing. Yeah, as you can see here, the market goes down, you put your buy limit here, the market goes and then comes back. That's what we call limit orders. As soon as the threshold is crossed, trade is activated. As soon as the market goes here and then comes back, boom, and then opens. And here, not active. The market comes close to the place you have put your limit, goes back, the market, you have nothing to do with it. Buy stop is order placed above price and price keeps going up. Yeah, you put your buy stop here and the price goes up. You put your buy limit, the market comes back, boom, opens, and then you continue riding up. A sell stop is you wait here, the market crosses and then continue down. And here you wait the market to go up and then comes back. And this is how you put it in your MT4. You will go to here. Here, as you can see, there is a sell limit, there is a market execution, there is a buy limit. You will select here which order you want, and then you put the price. Which price do you want the market that you are waiting the market? You put the price here, and then you put your stop loss, you put your take profit. The difference between this is Android and this is, I think, and this is iPhone. So iPhone, usually you write the price here, you write the stop loss here, take profit, and then the expire date. When do you want this? If this reaches like 24 hours after it's not opening, please delete the order automatic. But the Android doesn't have this option. It's only the iPhone that has this option. So you will only be able to enter price on pending orders only. Market execution, it's instant. You are just clicking buy or sell. You can set expire date advisably. Everything else similar to market instant. Others, you just click buy or sell in the direct market. And yeah, this is where we will stop tonight. And I hope that you have taken a note and you have understood what I'm talking about. I wish you all the best wherever you are. If it's a night, a good night. If it is a daytime, have a nice and lovely day. And before that, I want to say thank you all for joining tonight, and we wish to see you next week. Before that, I am out, and thank you very much.